Too often times people look to get a mortgage and they make it more complex than what it needs to be. It is a process, so let's get after what the basics are so you can understand it and get yourself a mortgage for that first home. The first thing you want to think about is applying for a mortgage with a local loan originator. Too often times people put the cart before the horse and they look online, they see the house and there's a link to some random loan officer that they don't know, and they just randomly apply with that person and maybe thinking now they're stuck with that person. That's not the case. I recommend getting a referral from mom, dad, your sister, your brother, your local real estate agent, maybe a friend that you talk to who's purchased a home in the past. Working with someone local can give you a lot of benefits, especially in the area in which you want to buy. From there, your loan originator is going to ask you to do an application. Now this is I call it an informal application because it really doesn't lock you into anything, but it's going to give us an idea of what we're dealing with and also what can you qualify for. That's going to be the big thing. So be ready to have 2 years of everything. Know your employment for the last 2 years. Know where you've lived for the last 2 years. Know your income for the last 2 years. Have you had overtime? Have you had bonuses? Are you salary? Those types of things are important on the initial upfront application process. The other thing that we're going to ask to do is pull your credit. And I know that's scary. Oftentimes people get on the internet and they're looking and getting scared. We're like, I know my credit score, but our credit scores are different. And it's not going to ding your score 8 points. It's really a 1 to 2 point hit because it's looked at a good debt. A home is considered a good debt, so it doesn't significantly impact your score to have your credit pull. Plus it's necessary, and depending on who your lender is, that credit pull can last for 90 to 120 days. So it's an important part of the process, and part of that application process is to be able to pull your credit so we can look at your scores that we pull and pull your debts into your application so that we can qualify you a lot better. From there, what we're going to do is we're going to ask you for 2 years of everything again. So we're looking at 2 years tax returns, W-2s, 30 days worth of pay stubs, and 2 months worth of bank statements. Those are the basics to get us started so we can give a good pre-qualification. Fast forward, you got the house, made the offer. We need to send you down to underwriting now. So the underwriting process is really simple. We take that stuff, we send it on down. An underwriter is going to look at your file. They're going to review your tax returns, your W-2s, your pay stubs, all those things we got up front. And they're going to ask for more stuff. They always ask for more stuff. Not often is it a one-touch file. So typically we're looking for updated pay stubs, maybe an updated bank statement. Maybe there's something in your bank statements that the underwriter didn't like, who knows? But there are some things that the underwriter is going to be asking for. They're also going to be reviewing an appraisal, title work, your homeowner's insurance, things like that in order to get you to the clear to close. So once those updated things are turned in and sent back down, they're going to do a final review before we get the clear to close and get you to that closing table so you can sign for your new house, which signs your life away. That's really just the basics about getting a mortgage in today's world. Again, if you have any questions, feel free to drop a comment.